The sole purpose of the YWCA Retirement Fund is to ensure income in retirement for employees of YWCAs throughout the USA. We serve more than 11,000 past and present YWCA employees, which breaks down to approximately 5,000 people who are currently working for a YWCA and participating in the plan, 4,900 people who have left the YWCA but have chosen to leave their accounts with us, and 1,600 retirees and beneficiaries. We serve 190 YWCAs nationwide. The fund was established in 1924 and became active in 1925. We were one of the first pension plans for women, and we predate Social Security. Initial seeding for the fund was provided by a $1 million grant from the Rockefeller family. The fund provides a cash balance defined benefit pension plan. This kind of retirement plan is focused on encouraging a career of service to one employer. Plans such as these are relatively uncommon today within the public sector, as they tend to cost the employer more. However, the non-profit sector and certainly the YWCA movement remain committed to providing pension benefits. The fund is an individual entity that is part of the YWCA organization, much like your association. We are not an external vendor, nor are we a division of YWCA USA. We have our own board of trustees, which includes several current or previous YWCA CEOs and the CEO of YWCA USA. The fund exists solely to provide benefits to the YWCA workforce, of which 90% are women. YWCAs are required to participate in the fund. This rule was established at the YWCA National Convention of 1976, when leadership voted to formalize the commitment to providing retirement benefits to women, who had historically been less prepared. Before we explain the details of how the fund works, let's compare it to a typical 401k. An employee makes contributions. Their employer may make a matching contribution of some percentage, and the account balance increases or decreases based on market performance. The fund is structured differently. Your YWCA makes monthly contributions to employee accounts at a selected contribution level. The fund then matches that association contribution with an additional 40%. This is one of the most important benefits of your YWCA retirement fund. For example, if your association's contribution level is 10%, the fund contributes an additional 4%, bringing the total monthly contribution to 14% of your monthly compensation. It's important to note that most defined benefit plans only add interest. Participants are not required to contribute their own money to the fund. However, you can make optional contributions if you choose. Due to IRS regulations, optional contributions to the fund must be after tax. However, you may make pre-tax contributions to your retirement savings if your association participates in the YWCA National 403B plan, which is voluntary and separate from the fund. You cannot make optional contributions to the fund if you are considered highly compensated by the IRS. This salary designation is set by the IRS each year. If it does not apply to you, you may contribute between 1% and 50% of your monthly salary to the fund, and you may start or stop these elections through your association's payroll department or our self-service portal at any time. The fund's interest rate is set each year and is based on Treasury rates for the previous year. YWCA employees become eligible for enrollment in the fund after working at least 1,000 hours a year for 2 years or 1,000 hours for 1 year. If 2 years, the 2 years do not need to be consecutive. Prior work hours count towards eligibility as long as the new employment is within 2 years of work at the previous YWCA. There is no minimum age to be eligible. Once you are eligible, you are enrolled by your YWCA on the first of the month following the end of the qualifying year. Once a participant, always a participant. This means that if you leave YWCA employment after you are enrolled in the fund, you are immediately re-enrolled if you ever return to YWCA employment. From the day you are enrolled in the fund, you are fully vested and your benefits are fully portable. You are eligible to receive them upon retirement, termination of employment, and if you are age 65 and employed by a YWCA, you may choose to take in-service distributions while you continue to accrue benefits. In the event of your death, payment will be made to your beneficiaries. You can receive your benefit in the form of a lifetime annuity from the fund. An annuity is a guaranteed monthly payment, a lump sum payment of your balance, or a rollover to another financial institution. Due to IRS regulations, the fund does not allow roll-ins. However, as your benefit is fully portable, you are free to roll it over to another employer's plan when you terminate YWCA employment. The IRS requires that you start receiving your benefits at age 73 if you are no longer employed by a YWCA. This age threshold is updated periodically. From the day you are enrolled in the fund, it is important to designate a beneficiary and ensure that their contact information is up to date. Because if you die prior to receiving your retirement benefit and you have not designated a beneficiary, your account balance is paid to your estate. This can result in a lengthy legal process before your loved ones can access the funds. If you die prior to receiving your retirement benefit and you have named a beneficiary, they can receive the benefit as a lump sum payment or a combination of 50% annuity and 50% lump sum. The fund also offers a death benefit for beneficiaries of participants who were only a part of the fund for a short time. If you die while participating in the fund for at least 6 months, the fund will supplement to ensure that your beneficiary receives a minimum of $5,000. And if you die after beginning an annuity, your beneficiary will receive payment if you selected an option that provides one for them. Both the association and the fund contribute to participants' accounts. This is one of the most special benefits of the fund. Participants are not required to contribute to the fund. Account balances never go down. Unlike retirement savings accounts like a 401k or 403b, fund accounts are not subject to market fluctuations. Unless you are receiving a distribution, your account balance can only increase. Participants own 100% of their benefit from day one, as they are fully vested. And at retirement, you can choose between receiving a payment for life or withdrawing some or all of your account balance. You can find all of this information and more at our website, www.ywcarf.org. We have self-service functionality for participants, which we are always working to enhance. There you can check your account balance and beneficiary information, access benefit statements, and run retirement benefits estimates. To sign up, you'll need your account number. If you can't locate that, please contact our Member Services team. Our Member Services team is available from 9 a.m. to 5 p.m. Eastern Time, Monday through Friday. You may email them at info@ywcarf.org or call them toll-free at 1-800-222-4738.